Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, October 22nd, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here that the ES sold off in overnight trading here and hit new lows. Those lows came in at about 34.02 half. You can see right there, 34.02 half. That's just above the 3400 quarter level, which is the FOMC key level, the 3400 level even, which is just a nice round number, and we've seen a bounce back up. One thing we've also seen is price push back above 3-day lows, so it looks like it's the beginning of what could be a failed new low pattern that develops into a more bullish rejection. In that case, price would need to push beyond the previous session's midpoint, and even better yet, perhaps close beyond that midpoint. And if that becomes the case, we may see a bullish outside day. However, to temper expectations a little bit here, this market has continued to see lower highs and lower lows, including today. We've seen a lower low already, and we have a lower high as of right now. And this market remains fairly bearish over the last couple of weeks. So really, this market needs to reestablish back above 3460 in order to really become more bullish ahead. Otherwise, we could continue to see this thing push lower. So right now, again, in the very, very short term, keep an eye on the previous week's low price. The previous week's low comes in right at about 34.32. And if price can start getting back above that level, keep an eye on the previous session's midpoint. That previous session's mid is 34.39, and from there the thing would become much more bullish. Overall, nothing really spectacular happens unless price can get back above 34.60. Okay, let's take a look now at the NQ. You'll notice that the NQ right now has developed a very narrow range over the last couple of days. You can see right here, again, with the way that this market has traded, it has sold off, but once it got to this low, it has sat at these lows for 2 straight sessions, now there for the 3rd day in a row, plus some of the other day. I mean, we have a pretty good range that's developed down here from 11,585 up to 11,800. That's the range. And again, we continue to see a bullish overall bullish trend here, but we've been pulling back here over the last week and a half plus, and again, we are in a short-term downtrend with new lows and lower highs. So right now, again, if price can't get it back above 11,800 soon, or worse yet, if price got above it and fails, kind of like a failed high here, that could lead to another round of weakness as we approach the previous week's close below at 355, which is also right where the FOMC key level is from September 16th. So again, we still may have more downside ahead, especially given the fact that price has not been able to successfully climb back above 11,800. So that's the key level above. Again, while we could bounce back up to that zone, can price get through it in order to get higher? Otherwise, a rejection here leads to that lower level below 355s. Okay, let's take a look now at crude oil. Now, crude oil has seen another failure to push higher. This is a very clear area of resistance right up here, and we can see how often it has failed at that area. Ever since failing here as support, boom, got crushed. It was sold there, failed high, over here rejected again, over here rejected again, and now being rejected yet again, and back to the 40 sticky level. 40 has been very sticky here, 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 then there, then here, and now back at it. And we're still inside that range until proven otherwise. Again, it appears like this market is really building up some energy here, but it has been reluctant to move. This day right here looked as though it was ready to get going. This level proved that it was indeed not. And so we're back to square one again, looking for a sign that this thing may finally break higher through 42s, or perhaps we see a rotation down instead in the near term. So because we've rejected these highs, the expectation perhaps is that we rotate downward into 39 for a test. We have a key range that extends from the high of this day down to the low, and we are currently testing that key range from below. And if there's a failure to get back above that zone, it opens up a move into 39.02, which is the downside range extension target. Below 39 opens up 37. All right, let's take a look now at gold futures. You'll see that gold futures continues to be in the range. Continues to be in the range. You have this range that has been compressing here. Price has continued to test the 1926 midpoint of the previous month's range, rejecting here, trap above and below, and now again same thing happening before. We're seeing lower highs overall, and we haven't seen kind of the ability to break through a prior pivot high recently. I still believe this thing is kind of doing the long game here before we see a major rally down the road, perhaps into the end of the year and into the beginning of next year. Again, if we do flush one more time or another time, a trap below the previous lows here could be a great way to bring it back toward 1940 and perhaps beyond. Right now, bulls need above 1940 or perhaps 1950 especially, but 1940 to really open it up to the upside. And the ability to get above 1940 will at the very least lead to a return back to 1981.70. But then it begins to likely open up a continuation much more beyond that as well. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.